It's another opportunity to do 55 minutes of business going around the world of business here on Business Incorporated. Here's what we have prepared for you today. Kenya is now the third largest flour trader, according to IATA. Egypt and Uganda are having joint farms. We'll give you the details on the program. Trump tariff is still a global conversation, but we'll bring it down home, see how it's affecting domestic economy. Good afternoon, I'm Amy John Mekwa. We start business now from the global space. As usual, tell you that oil prices edge higher on Wednesday amid oil supply disruptions in the United States and Russia, and markets are awaiting clarity on the Ukraine peace talks. That's a major one, moving markets and investor sentiment. So we see green numbers, what you see, 20 cents, which is about 0.3% for Brent. $76.04 a barrel. WTI is also up 0.3% at $72.08 a barrel. And yes, cold weather is threatening U.S. oil supply, with the North Dakota Pipeline Authority estimating that production in the country's #3 producing state would be down by as much as 150,000 because of that weather threat. Also, United States President is talking again about 25% a tariff. I told you about this morning. It's more tariff that may be coming on auto and chip makers. And the peace talks is also a major one. As we know, Russia is a major contributor to global oil supply, and there are sanctions on Russia oil at this time. So if the peace talks goes through and the sanctions are removed, then we can have a full supply of Russian oil into the market. So these are factors driving oil prices at this time. Now, looking at metals now, gold fell on Wednesday on profit-taking after prices hit record highs recently. I mean, the price of gold has just been moving really close to $3,000 per ounce. And so we see for this afternoon, investors are watching out for the peace talks again after U.S. President Trump agreed and said that we're going to have more talks with Russia. Although we do hear that Ukraine is being skeptical about this, going to Saudi Arabia, which is supposed to be the venue for the talks. But look at the numbers for metals, 0.2% in the red, still around $2,928.52 per ounce. U.S. gold is down also 0.1%, $2,945.90 per ounce. Spot silver is down almost 1% at $32.57. And platinum is down 1.3%, $974.32. Palladium also down more than 1% there, $974.56 per ounce. And of course, the major drivers are still the peace talks and then President Trump's tariff talks and issues around that. Now we come here to Nigeria and see what's happening. Beginning with the British International Investment, that's BII. Well, the UK's development finance institution and their impact investor, they've reiterated their commitment to foster better collaboration with Nigeria through players in the private sector. The latest move is a $40.5 million investment in the agricultural sector, which BII says is poised to play a more prominent role in the global supply chain for sustainably sourced products.
BII will support John Bents to source the majority of its raw cocoa beans from local Rainforest Alliance certified farmer cooperatives, therefore directly supporting smallholder farmers. This will also increase the plant's annual sourcing capacity to 30,000 tonnes a year, contributing to a more sustainable and more robust local cocoa industry. This fits well alongside the UK's climate-smart rural agriculture programme called PropCom Plus, which is supporting sustainable cocoa in Nigeria. That initiative works alongside different levels of government, business and local communities to promote investment and export opportunities for deforestation-free cocoa in southern Nigeria. And it's part of a broader effort to attract private capital into sustainable forest commodities and create long-term positive impacts. By increasing cocoa sourcing and processing capacity, John Vence and other companies can boost their exports, which then contributes to Nigeria's economy by diversifying its export base and generating foreign exchange. Therefore, this partnership underscores the UK's unwavering commitment to working with Nigeria to unlock investments in sustainable land use and forestry, all the while promoting positive social outcomes and enhancing climate resilience for local communities and smallholders.
Now, more than 300 businesses were represented as the Federal Inland Revenue Service began their engagement on the first phase of electronic invoicing. The service believes that this will be at the core of a new tax regime, which will build confidence among taxpayers and enforce transparency in the country. The Chief of Staff to the Executive Chairman of FIRS, Mr. Tayo Kule-Osho, who represented the chairman, explains that the E-Invoicing solution is an accounting system that can be installed on PCs, phones, tablets, and cloud-based platforms to generate electronic invoices with tax elements that can be tracked and documented for tax administration. Tax elements that are included in the invoicing for both B2B, that's business to business, and business to corporate transactions include invoice numbers, goods or services description, applicable taxes such as VAT, tax rates, and amounts payable, among others.
Started a new journey in our engagement with our taxpayers as FRS as we start this new innovation of deploying an electronic invoice, also called a merchant buyer service solution. And the idea is to meet with the large taxpayers and understand what their own requirements are as we continue our journey into what we call a tax administration solution 3.0, where there will be more integration with the electronic reporting systems, the POS systems, and all the other cloud solutions so that our businesses can be more efficient and they can have a better integration and exchange of data with the tax administration, and also provide more data for their business and making intelligent decisions for their businesses and even for the country to make both fiscal and monetary policy decisions. So those are some of the things that we are hoping to get from. So this is a pilot. This is a pilot implementation that we're about to start. We have a couple of the large tax customers, companies like the MTN, Huawei system, and a lot of the oil and gas companies that are already integrating with us. But this engagement and this integration will last, we think, the next 6 months. So it's a journey that is, we are being deliberate in making sure that we have all the stakeholders carried along, consulted, so that all their feedback can be integrated into this system.
The Council for the Regulation of Engineering in Nigeria, COREN, has been restructured to empower it, monitor and manage activities and individuals in the sector for better results. The implementation requires the existence of regional committees to allow for close monitoring of activities, which members say is at the root of the over 600 collapsed buildings in the country, looking at till date. The creation of committees was the core at a meeting in Lagos State. Members of COREN believe they have a role in actualizing the benefits of economic reforms. That's the reason for this meeting, tagged Regional Engineering Stakeholders Summit on Restructuring and Reforms. The chairman of the Lagos Regional Steering Committee highlights the roadmap to achieve this, which includes expansion of engineering regulations, monitoring and enforcement in key sectors, which include manufacturing.
Post-passage of the law, which has expanded the scope of activities of the council, which in itself is aimed at enhancing the role of COREN in the regulation of engineering in the development of our nation. The structure and operations of the new Regional Steering Committee is intended to bring COREN's regulatory activities closer to the component parts of the nation. And it will be explained to us how this framework will work and the relationship between COREN and all engineering personnel and those who utilize the services of these engineering personnel.
The body believes that incidents of collapsed buildings is a weakness in economic development and can be curbed when personnel are regulated strictly.
COREN is also repositioning itself to ensure enforcement and compliance. And this we want to do through what we have now activated: whistleblowing, intelligence gathering, surveillance, and of course, apprehension and, if you like, the investigation panel, and finally, the tribunal.
In addition to the reforms of COREN is the power to prosecute non-registered members. This, the executive believes, will accelerate the process of weeding out quacks from engineering in Nigeria. Well, another issue making the rounds in economic conversations in Nigeria is the new CPI number released yesterday by the MBS, which indicates that inflation has dropped by 10.32% between December and January. So this is a result of the much-awaited rebased CPI while we await the rebased GDP. And, well, one of the reactions has been trying to understand the new methodology which has led to that more than 10% decrease in inflation numbers. Ladi Williams had a conversation earlier today, and this is just a snippet of it.
In 2023, the National Bureau of Statistics carried out the Nigeria Living Standards Survey. And in that Living Standards Survey, they found out that on average, Nigerians are now spending, in terms of the proportionality, they're spending lower for food. And so that means that the weight class for food reduced from 51% to 40%. So now if you bring that into context, as we know, of course, the biggest driver of inflation in Nigeria is food. Food prices are super high, and we've noted that since 2020. And when you bring that into context as well, there was also another significant reduction. Price expenditure for housing, for water, for gas, for electricity, the weight class reduced due to that Living Standard Survey from 16% to 8%. So that's a 100% reduction. Obviously, there were increases due to computations. There were certain weight class increases, like healthcare, for instance, it doubled from 3% to 6%. Other weight classes like transportation increased from 6.5% to over 10.7%. Those increases were significant, no doubt, but nothing can be as significant as the food weight class reducing from 51% to 40%. So that recalculation, and then, of course, the use of a very volatile year as the price reference period. 2024, of course, as we know, is the year that Nigeria recorded its record high inflation rate and its record high food inflation rate.
Yeah, well, you can expect that that conversation will still be in the news in the next couple of days at least, especially as we head towards the MPC announcements or decision announcements. The meeting obviously begins today, and tomorrow we do expect to get the decision. And inflation is a major factor in the decision of the MPC. So we'll see how it goes. Tomorrow, I guess about this time, we'll be having that conversation right here on Business and Corporate, so you can join us for that. But now, let's increase our tentacles and see what's going on outside just Nigeria, but of course, as it affects Nigeria and the African continent. And that's the Trump tariff, as well as the peace talks are supposed to be going on in Saudi Arabia and other parts of the world to bring an end to the war in Ukraine. Of course, we're going to just look at how that could affect us. We have joining us for this conversation Dr. Ifeanyi Uba is the head investment research at Commercial Partners. Dr. Uba, good afternoon, and thank you for your time.
Thank you very much for having me.
So we've seen a lot of shakes, movements coming to the world. Just yesterday, President Donald Trump has hinted on the possibility of another 25% tariff on automobiles and chip makers. But looking at where Nigeria is, where Africa is, have we started feeling the impact of this, or can we say we will feel the impact of this tariff trade war that seems to be raging?
Well, the global economy is so linked that we would not, we will be doing ourselves a disservice to say we're not going to feel the impact of these policy movements. We're already seeing retaliatory movements from China and retaliatory movement from Mexico. But more importantly, we are seeing the actions on the price of commodities. We are seeing how hawkish or the bullish momentum gold has been maintained with slight profit taking. Is a little, I see little people shorting gold at levels it is. Our price target for gold was around 3,000 in half year, and right now gold is trading around 2,933, showing that this tension in geopolitical tensions and tariff talks is adding pressure to the commodity prices. And given the geopolitical length and the way central banks have been decelerating their dollar reserves, we are seeing the gold having to maintain this uptick and maintain this bullish momentum.
Mm. So we spoke to our correspondent earlier today in the United States, and she told us that it seems a lot of uncertainty when you look at investor sentiment. Even consumers seem to be uncertain at this time. Can we say that sentiment has spread to other parts of the world?
Yeah, so we've seen a lot of data come out within the first month of the year, and we saw a decline in retail sales of 0.9%, showing that the resilience of the United States is being put to test in terms of continuous purchase and continuous growth in GDP. A big part of the US economy, the credit and availability and the movement of the monetary policy affects and it moves the direction, stimulating the economy in the right direction. Although Donald Trump has explicitly said that he is going to reduce the interest rate, we are seeing that the monetary policy is being less quick to reduce this interest rate due to these tariffs. And this tariff is having a trickle effect on inflation because, as we projected in our outlook, increased geopolitical tension and increased tariff would added pressure to the inflationary measures that the United States are trying to reduce. So if they are having threats of inflation, it's going to be very difficult for the monetary policy to start easing. That is why most analysts don't think there's going to be a rate cut within the first half of the year.
Mm. So the WTO DG had warned that if the world goes this path of tariffs and counter tariffs and retaliatory tariffs, that we could have double-digit losses on GDP globally. Does it look like we are close to that threat, or do you think that perhaps the world can escape it?
Well, what we see now is Donald Trump coming to the global stage and making sure everybody knows he's a big player. Even though he has reiterated that tariffs are going to be a major part of the US economy, and we understand the negative impact on the growth. I still am optimistic in the medium to long term that there will be crucial deals met that will be able to lead to sustainable growth. As we see that his posture is that of reduction in wars, while the other administration might have been funding the wars, he is looking for ways to try and cut that funding and reach a peace agreement. So reaching a peace agreement and reducing the amount of wars in the world could also still significantly affect the growth. So it's a dicey situation to see, but we need more data and more forward guidance to actually know the true impact on GDP. But one thing is sure, it's definitely bearish.
Hmm. Well, we hope that can balance out with, as you said, he seems to be looking for peace, even though, we also have fears around that because we see it seems Europe, which is closely related to Ukraine, seems to be excluded. Even now, we've heard President Zelensky said he's not going to Saudi Arabia because he thinks that perhaps the U.S. is having some arrangement with Russia that may not be of benefit to them. But Hopefully, this peace talk start. Hopefully, it does bear fruit. Can it reduce the tension that perhaps the trade war could bring? And could it take us back to the Ukraine-Russia war? Because we know what happened to logistics when this war started.
Well, it's an interesting factor to examine. Could we get back to pre Ukraine war period? It's hard to tell given the impact and the effects of the wars right now. One thing is sure, um, Russia being out of the oil markets, and if a peace deal is being reached, we might see Russia enter into the oil market. One thing I would like to know is how this deal will be reached and what will be the participation on Russia in terms of commodities. As we know, one of the fallouts of the war was that the Russian rubles now became a payment system for the oil. Aside from that, it was only the US dollar, and prior to last year, only the US dollar was being used to trade oil. But a peace deal might mean that Russia might need to trade back with the US dollar. And given that Russia already in alliance with the BRICS, the geopolitical tension around this whole issue is very dicey. And we all saw what Emmanuel Macron wrote in the Economist interview when he was interviewed in the Economist, sounding the alarm about Europe being in dire concern because of the movement of Donald Trump. Well, on his argument, they had 3 years to fix it and they did nothing. So he taking the bold step to go and meet the person that everybody is scared of might build more fruit. So I feel what we are facing right now is a knee-jerk reaction. So much tension, so much volatility. But the way the world is interconnected, we cannot easily forget. And remembering does not mean it has to be a bad scenario for everybody.
Can Africa get a little opportunity to maximize some of its potentials amidst all of this giant trade war?
Yes, certainly. Part of the side effects of this trade war was a reduction in purchase from Ghana or a reduction in exports from Ghana to places like Russia, and we could increase participation to that particular country, increase sales to that country, and as they enter back into the fold of the financial space. Remember that prior to this war, one of the effects of the war was being kicked out of the SWIFT system and isolating them. So having them enter into the international global space will mean more African countries can sell or whatever they want to Russia.
All right, Dr. Ifeanyi will look, of course, to what's going to happen next. The peace talks and the tariff threats seem to be coming in different phases, and we do hope, as you said, that there will be a bit of compromise and agreement so the world doesn't lose that double digits of its GDP, as the World Trade Organization DG had warned. Dr. Ifeanyi is a head investment research at Commercial Partners. Thank you for your time. Welcome back to Watching Business Incorporated here on Channels Television. We'll head to the markets now and see what's happening right there. Of course, we'll start from home and see what's happening at the NGX. We've had a couple of red: Friday, Monday, Tuesday, and now on Wednesday. Yesterday, the market was red. Every counter was in the red. Investors are just right there. But I mean, I guess the good thing we can say is we're still around 107,000, although we came down from 109,000 and then stayed on shortly on 108. And we've been on 107 now for, I think, about 2 trading days. So this afternoon, we see that it's still a red market for the NGX, 0.25% down. But Johannesburg seems to be thriving. We've gone past 88,000 level to 89,000. So they're at 89,128.44 in the green, 0.08%. Right there. Looking at other parts of the market, other parts of Africa, I beg your pardon, for Egypt, it's positive 0.67%, 30,797.41. For Nairobi, Nairobi is also green, 0.60%, 132. See them back at this level. That's they hit before, but I mean they lost it for a couple of weeks. So perhaps this is the way to a new record high, and we hope that the Nairobi Stock Exchange would get there. And then we move over to the Middle East to see what's happening for the Middle East. Dubai is red this afternoon, 0.03%, the 5,373.12. Abu Dhabi is also red, unfortunately. Saudi Arabia is also red as a Tata war. Qatar alone is the green that we have at this time, 0.07%, 10,645.69. Now let's go to Asia and see mixed trading on Wednesday. Japan, for instance, is red, 0.27%. Kospi of South Korea is red, but Hang Seng was able to make it through. Now, for Japan, we see that business sentiment for manufacturers rose for the second month in February, and the manufacturer sentiment rose to +3, the highest level since November when it was +2. And then Hang Seng looking very comfortable, 1.7 there, 22,911.52. We look at other parts of Asia. Let's see what's happening there. We see Shanghai is very good, 0.81%, while Nifty is still struggling in India. I guess one of these days we should be able to get maybe some analysts in India to tell us what's going on in that market. It's been down for I mean more than a week now. So they're still at this. This is a resistance point. We hope they don't go lower than this because this is a resistance point that they have had for the last time they had a new high. So that's it for the Asian markets. We go to the United States and see what's happening there. Do we say the economy that controls the world, at least? So we see the Dow Jones is in the green, 0.05%, 44,664. S&P is also in the green. NASDAQ, interestingly, sustaining the green color as DeepSeek gets some bashing there. So it's at 22,257. But let's take some hours, go back some hours and see how the market traded at the close of trade yesterday on Tuesday. Our correspondent, Maria Bird, gives us the details now.
The U.S. stock market was mixed on Tuesday as the S&P 500 had a record-setting day, rallying just 10 minutes before the close of the bell, closing at 0.24% up. And the Dow Jones also closed slightly up just above flatline at 0.02%. And the heavy tech Nasdaq also had a bit of a challenging day, but was able to close in the green at 0.07% up. Energy companies led the way for the S&P 500 and had great growth on Tuesday. As many investors are watching to see what the Federal Reserve will do, it is clear that they are looking to stay steady over the next few months. Interest rates will not be cut anytime in the near future, nor will we see increases in interest rates. There is hope that the inflation can decrease and that we could see some flatlining in spending. Many investors are watching and keeping a close eye on the U.S. economy over the next few weeks.
All right, thank you so much, Maria. And now we're going to go back to the Nigerian market and find out, I mean, with the numbers that came out. But first of all, our DSTV viewers, we have to lead you to Gombe State. Right there, the government of that state is holding local government summit. They want to look at the autonomy and fiscal responsibility and sustainability development at Gombe State. But that is for our DSTV viewers. But for our other platforms, we continue here on Business Incorporated. However, if you're watching us online, you can always switch to the next platform to continue watching Business Incorporated. Now, let's talk to Dimeji Obasa, fixed income dealer at Access Bank. Hi, Dimeji, good afternoon and welcome to the program.
Good afternoon. Thank you for having me.
Great. I don't know, were you expecting that change to be that much or to be in the direction we saw it, talking about the CPI that was released yesterday?
Oh, yes, we expected the change, and this is because of we had heard the news that there was going to be a rebasing, but that was not necessarily what we can attribute the bulk of the change to. The bulk of the change can be attributed to the change in weighting. The weighting is essentially the components that make up the CPI figures and the weight that they carry in the computation. So that's like where we saw the bulk of the impact from and that caused the reduction that we saw.
Mm. So, I mean, bottom line is that now we have a positive interest rate. So, of course, what that means is that uh, inflation is now lower than our interest rate. That should be positive for investment. Do you see that? I know perhaps it's too early. There's an auction today, I believe. It's too early to expect that to sip into investors' action for today's auction. But can we expect that to make a difference in the fixed income space?
Oh, yes, we've seen that cause a significant rally in the market and the fixed income space. It's not clear whether or not we will maintain that real positive interest rate for long. As you noted, there's an auction today. The general expectation for that auction is to close at a discount rate of 18.5%. So the yield on that should be somewhere around around 20% or maybe up 20 between 20 and 21%. So that would take us back to having negative real interest rates again. However, if you go further down the curve on the bond side, we might start to see markets react to that and maybe move prices up if the real interest rate is something that is of serious concern to investors. But that doesn't seem to be the case at the moment. Right now, we just have a rally in the market. There's a lot of cash chasing the securities, and we expect that it to be bid a lot lower this time compared to the last auction.
But how do we expect this to change or affect the decision of the MPC? Their meeting starts today. We're expecting the decision announcement tomorrow.
Well, it's very clear that at the very least, they are going to keep the rate steady. That's like the worst case scenario that we see. For sure, what the most likely to be the case is that we would have a reduction in the policy rate. They might, however, want to just keep it steady just to not be too reactionary and then see what the next print of the CPI would be next month or the coming months. But we do not foresee that they would be looking to hike rates any further. The most likely scenario today, or rather tomorrow when they announce their decision, would be a reduction in rates with, for our side, base case being that they would just leave the rates at where they are.
Do you think there's the possibility of a reduction in rates at this time? We're still heading to our target of 15% when it comes to inflation.
Yeah, we are far from that, but we still have, we've had like a significant reduction in inflation, albeit as a result of a change in the way inflation is calculated. But at the end of the day, if they simply go by the data, the most likely case is that they would cut rates, even if it's just to show the market the direction that they see rates going, and by extension, inflation. For us, the most likely situation or most likely scenario is that they will cut rates.
Yeah, so you've noted that perhaps that positive interest rate may not last for long, but how do you expect all of this to affect domestic borrowing of the federal government especially?
So what we have in the market currently is we currently have a bullish run where rates are coming down very fast. That might be short-lived. Today, we would see the outcome of the NTB auction. As I said, like the general consensus is around 18.5% handle. On the bond side, which is where we have a really high rate, particularly from the last auction where the 2035 closed at 22.6%. We've seen that particular bond trade to as low as 20.6%. So it's very likely that at the next bond auction, we would have a reduction in rates. Now, what that means is that the cost of borrowing from the federal government, as far as borrowing from the capital markets through fixed income securities, is expected to reduce. So we should see a reduction in the federal government's cost of borrowing from the capital market through these fixed income securities, in line with the general market sentiment for lower rates at this time.
All right, Dimeji, thank you so much. Well, we do hope it will reduce our debt servicing, but we'll see how that goes, because the budget still has to be funded one way or the other. But thank you so much, Dimeji Obasa, a trader at fixed income trader at Access Bank.
Thank you.
Now let's move to other parts of Africa. Kenya is now the #3 exporting country in the global air transported flour market, and that's according to the International Air Transport Association, IATA. They say Ethiopia is now the 4th, while Kenya is #3. This was against the background of a dramatic increase in the global flour trade over the period of 2003 to 2024. In 2003, the global air transport flour trade had been worth $852 million, but it has increased by 4 times to $3.7 billion. In 2003, the main exporting country had been Colombia with a market share of 50.2, followed by Ecuador of 16.2, the Netherlands 8.9, and in 4th place is Kenya at 8.6. The rest of the world accounts for 16%. Last year, South America retained a dominant position in the trade, with Colombia still in the 1st place, but the share had reduced to 42.3%. Ecuador remained 2nd, but its share had increased to 26.1. Then came Kenya with a share that had nearly doubled to 16.1%, and then Ethiopia is 4th with 5.5%. The rest of the world accounts for 10.3%. Netherlands no longer features on its own as a flour exporting country. Well, interesting areas of trade right there. Would have thought that flour could make so much money for a country. But still in Kenya, the drop in home ownership hype, coupled with slow credit growth, has seen a 14% year-on-year drop in house prices, according to fresh Kenya Bankers Association data. Prices in Kenya's housing market continued to decline towards the end of 2024, creating opportunities for potential homeowners while signaling challenges for real estate developers. The latest Kenya Bankers Association Housing Price Index shows that house prices dropped by 1.1% in the 3rd quarter of 2024 compared to previous quarter, and fell by 14.28% year-on-year. The research director, Samuel Tringola, said that the slowdown in prices reflects a shift in market dynamics. The Minister of Agriculture and Land Reclamation, Ala Farouk, has met with delegation of the National Enterprise Corporation led by James Mugira to follow up on the implementation of the Egyptian-Ugandan joint farm. During the meeting, the minister stands on the implementation of the farm, which is established in Uganda on 500 hectares for animal and plant production. For his part, the head of the delegation lauds the role of the farm in contributing to planning intensified new and high-quality clarification and production of corn and soybean. The farm is considered a guiding, research and productive farm, and it says that it's highlighting they'll also be focusing on breeding animals and training the farmers in Uganda. It says the farm will highly contribute to transferring Egyptian expertise, which is the main goal from establishing these Egyptian farms in the African countries. The Egyptian Minister of Agriculture lauds this relation between Egypt and Uganda, asserting the importance of the directives of President Abdel Fattah el-Sisi to present all aspects of support to those he calls African brethren. We leave Africa now. It's been 11 years since Russia first invaded Ukraine and annexed Crimea. And next week, it will be 3 years that Russian troops invaded Ukraine again, starting a brutal war that has cost millions of lives. The new administration in the U.S. says it wants to move quickly to end the war now and bring peace. A first round of talks started in Saudi Arabia, and we know some of those controversies that has surrounded that. EU representatives say they are watching carefully since they seem not directly involved at this time. Let's have Lars join us now to give us the details of what is hearing. Hi, Lars. Good afternoon and welcome to the program.
Hello, Ini. How are you?
Great. So we're hoping for peace talks to start, but I mean, there seems to be a lot of controversy around it. EU is not involved, and then UK are also saying their part. And even President Zelensky, I think he said he's not going to Saudi Arabia. What's Berlin saying?
Yes, certainly any controversy is to put it mildly. For us here in Europe, it is really most important to say after this first round of peace talks that we have seen yesterday that we were, as the EU, watching from the sidelines. And so, as you just pointed out, were the Ukrainians, and that is outright ridiculous. It is obvious that peace talks can only happen with all parties involved sitting at a table. However, the United States administration here, playing peacemaker, found neutral ground to meet with a group in Saudi Arabia, but then only invited Moscow actually to the table. And U.S. Secretary of State Marco Rubio has now admitted that a second meeting will have to follow soon, and that it will be with Ukraine and the EU president. And Ukrainian President Zelensky so far has said, of course, that he, for his part, would never agree to any agreement done without his country's input. Now, only to be surprised pretty much overnight by President Trump in Washington, accusing his country of starting the war in the first place. Yes, Donald Trump saying that has been reported, obviously, Ukraine, quote, should have never started this. It's absolutely unbelievable how he's blaming the victim here for Russia's aggression. Anyway, for Europe and especially the EU as an economic bloc, they are open to join talks. After all, the situation with Russia is key to the continent and the bloc's future security.
Yeah, well, I guess President Trump is saying that because it's an opposition party taking over and all of it. But that's domestic issues. But why does it seem like he's pressing so hard for peace at this time?
Well, much of the action that we're seeing by U.S. President Trump has to do with money, the economic impact of the war. And it's, of course, somewhat complicated. Obviously, much of the world wanted that war to stop a long time ago, and that includes very much the previous U.S. administration. But they saw, as did others, little chance of Moscow backing down. And they weren't willing to sacrifice Ukraine to placate Moscow either. Now, Trump might have little problem with that, as he has just confirmed with these latest statements. Now, Trump is rumored to push for Moscow ending the war and granting them maybe part of the Ukrainian territory. We don't know what we have to expect there. He doesn't seem to care at all about what message that sends, how it would embolden Putin to invade other countries too, for at least some land gain. That is not important to him. Trump wants to get out of paying Ukraine billions in military support, and he wants to normalize business relations between the United States and Moscow. After all, U.S. businesses lost around $300 billion when the war started, and they fled Russia. As for the EU, they're also preparing another pack of sanctions right now against Russia, so we're seeing a very different policy here. 13 more banks will be kicked out of the pan-European SWIFT banking system. 8 Russian media organizations are losing access and licenses in the EU. There's an import ban of aluminium, and there are more sanctions against Russian ships, their owners and captains. All that is about to go into effect on Monday for the 3rd anniversary of the war.
Wow, it does sound like Russia has got something coming up their way, and perhaps everybody really needs this peace, because I'm sure even the EU economy will be feeling the impact. But let's leave that for a moment and see what investors are doing intraday.
Yes, They're actually looking at yet another record high. The DAX in Frankfurt climbed to over 23,000 points this morning. It is the 19th record high this year. Unbelievable, given the economic reality, the obvious instability in Eastern Europe, the threat of tariffs from the US, Trump talking about 25% tariffs on cars. Again, of course, as so often, he's not giving any details. But all of this uncertainty, all this is not bothering investors too much. However, there are signs on the options market now that point to some skepticism among investors. Lots of put options out there that are used to insure usually against weaker markets. So maybe there is something about to hit us that we can't clearly see yet. Anyway, looking at winners in today's trading session, Rheinmetall is right there once again at the top. The German defense giant is planning to build up production plants in Ukraine to build tanks and ammunition there. So that is bringing us right back to that topic of the day, those peace talks and what's going to happen in Ukraine.
Yeah, well, the war industry seems to still be gaining from this in spite of the attempts at peace talks. Well, thank you so much, Lars, for giving us updates from Berlin.
Thank you, Ini.
So there you have it. We're looking for how to get peace, but I mean, some corporates and individuals are still, profiting from the war. I guess it's just a balance in life. I don't know what side Laddie belongs to, but I know he's most likely on the side of crypto.
Well,
Laddie,
I'm all for peace.
yeah, are you sure?
Yeah,
or you're,
I love
you're,
peace.
Or you're all for profit?
We should be able to profit from peace too.
Ah,
You don't have
okay.
to
So
profit
what
from
happens to those
war.
who make the ammunitions and the missiles?
Yeah, they cash out, in times of war. I guess that's their lot at this point. But let's get a check on what's played out with the market. Now we're seeing green on the screen from the sell-off we had yesterday. Just XRP and Cardano still holding the red color on coin 360 at this point. Ethereum, $2,700. I guess the longs in the market there enjoying some reprieve now because we've been getting a lot of sell-offs, with the bears trying to dominate the price of Bitcoin. Let's look at some of the headlines in the market now. We see Nigeria set to amend its crypto and digital transaction tax at this point. We know tax and cryptocurrency, that's one segment people don't really understand at this point. But we're seeing that the SEC is planning new rules to ensure all eligible transactions on regulated exchanges are taxed. I'm sure for the decentralized exchanges, that might be a little difficult. Then we see the Binance founder, Champeng Zhao, that's CZ Binance, he pledged 150 BNB, worth approximately $100,000 to support those affected by the collapse of the controversial Libra coin after a college student began raising funds to assist those victims. So he put out money to help, and he got more money in return. Then we see Binance again in the news. We see the federal government is planning, or through the Federal Inland Revenue Service, they've asked the Federal High Court in Abuja to order Binance Holdings Limited to pay about $79 billion and 231 million naira for economic losses allegedly caused by its operations in Nigeria, as well as about $2 billion in income tax for 2022 and 2023. That would be a lot of money if Binance actually pulls out and actually pays. That's a good sum right there for the federal government. So these and other issues still be discussed at this moment. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Good afternoon, Laddie. Good afternoon.
Good afternoon, Rume. Always great to have you. So it seems Nigeria's federal government, I don't think they're done with Binance, just yet by, what we're getting at this time. We've seen that relationship between this top cryptocurrency exchange and the federal government in Nigeria. It's not been good, so far. But how are you seeing the latest development?
So the latest development that actually came up on the news right now is a situation of it's a situation where the federal government is looking at it like, oh, you guys must be punished, irrespective of all of the interference that have come in to make sure that the executive that was actually been arrested at some point is let go. That Binance has to face the music. Although a couple of persons in the industry have actually said that not exactly Binance is the cost of our economy challenges, but we know there's also a role they played somehow with some of the price at some point, making it look like Binance is the way to get the rate. But our economy is somewhat leaving that aside now and seeing how I think CBN is determining the rate at which dollar is being brought into the market or is being sold into the market. But the idea right now of them going to pay the fine is also very important. There has to pay. There has to be some kind of fine in all of this put together. The Binance has to pay, but the idea of the amount that is coming out as a result of the fine is something that I really don't know if Binance is going to be able to pay that. And let's not also forget that Binance did not apply for the provincial license that the SEC is giving. So it only suggests that they really don't have interest coming in, considering some of the challenges that are happening and some of the information that the authorities wanted is not something that the platform wants to give in terms of privacy and all of that, private data and also all of that, So I think it's something that the authorities can come up to find a way towards so that we can also have all of these interests aligned, more like a win-win situation. But
Right.
I wouldn't say Binance is innocent, but I would suggest that there needs to be a balance somehow.
Right. It seems, getting to tax crypto, it doesn't seem to be the simplest task at this point. But, going back to what you said about the, P2P market and, Binance being a reference point for the exchange rate, back then when, people were allowed to use the Binance P2P for cryptocurrency exchange and conversion, from Naira to dollar. But do we still have P2P exchanges operating right now? And why aren't we seeing that negative impact on the Naira?
Right about now, Binance is no longer operating in Nigeria. Binance is no longer operating in Nigeria. But is it for us to now say that we now have the very best of the best economy because Binance is not operating? I don't think that is correct. And I also think that some other platforms are operating. It's now left for the SEC or some other agents of government to be able to do their own due diligence or maybe use analysis to find out. I don't think I should be giving such information right about now, but I think some exchange platforms, Peradventure are doing their. We have licensed exchange platforms, Butcher and Quidas, quite all right. But I still think that some of these foreign exchange platforms still have a way of doing some of these things, and I think it's not good at all. Binance is not doing all of those things, but so is looking to those guys to be like, oh, since Binance is out of the way, it's now their turn to maybe take a share of Binance, but. You have to do the truth is Nigeria is being taken for granted right here when it comes to the crypto industry. And a couple of us that are analysts in this space, we're talking about all of this. Because it's not good. It doesn't put us forward. Some things that they can't do in the US, they're doing it here. A couple of them are operating here, irrespective of the fact that they don't have the requirement to operate. So I think the authorities should do their due diligence to make sure those guys actually do what is right. But in the case of Binance, I think Nigeria, we have moved past that idea of going to one platform to check rates and benchmark and do all of these things. The CBN comes up, sells dollar, and that is what people use to do transactions and benchmark, not a cryptocurrency exchange platform anymore. And right. I think I must give kudos to the CBN for doing that. So I think a lot of things are going to happen, and let's watch and see the best of the best, because we only have one country and we need to make it better. As the case may be.
Right. We're all up for, the stronger Naira and anything that keeps the Naira, strong at this time. But thank you so much, Romeo. It was great having your perspective. Thank you.
Thank you very much, Laddie.
Yeah. So, that's it. Binance back again. The federal government of Nigeria.
$70-something billion.
Yeah, it's quite a Quite a sum.
What's the worth of Binance as a...
Yeah, so it's a rich exchange. They're quite rich. They do a lot of volume, globally. They're one of the biggest exchanges in the world. But that's a lot of money still.
All right, Ladi, we'll see how that story
We'll see how it plays out.
Yeah, thank you. All right, so that's it on the program. Thank you so much for being a part of Business Incorporated again. But don't forget, there's another episode coming your way tomorrow, beginning at 10 a.m. with Business Morning, and then at 1 p.m. Business Incorporated. But other than that, I'll see you tonight for the Stock Market Report. Bye-bye.